The future belongs to service providers who innovate without limits. That's why the fastest growing service providers are choosing the NetSapiens platform. Visit netsapiens.com.
Hey everybody, it's Doug Green and I'm the publisher of Technology Reseller News. And I'm very pleased to have with me today Tim Harris, CEO of SoloTruth. Tim, thank you for joining me today.
Thank you, Doug. Thanks for having me.
So the headline, and we ran it a few days ago, is SoloTruth has launched an asset relationship management platform for enterprises. We're going to be diving into that. Also, I think going to learn that it won an award as well. We're going to learn all about these things. But first, Tim, what is SoloTruth?
So SoloTruth is a software platform that bridges the gap between physical assets that a company owns, typically they're asset-intensive businesses, and financial record, so the financial system of record. So we're making sure that what a customer or a company actually owns is reflected in accurately in their financial system, typically the ERP system.
So this is basically what I think in the conversation we had just before, you're calling this asset relationship management.
That's
right?
Correct. Yes, we want to be to assets what customer relationship management is, CRM is to customer records. So what started off there as a system to record contacts grew into the actual entire sales cycle and the relationship between companies and their employees and the sales cycle. We want to do the same thing for assets, have a 360-degree view of the asset. Hence the name ARM, or Asset Relationship Management.
So one fine day, someone goes out on behalf of the company and they acquire an asset. But then, according to what I just heard before we started our podcast today, somehow in the course of events, we lose track of the stuff we buy. Is that basically what happens?
That's part of the problem, yes, is that there's what's called asset drift. So if a company acquires, a forklift, let's say, and it is recorded in the ERP system at the time of purchase or deployment into the manufacturing facility, for example, or to a telco company, and it gets moved to another location and or gets misplaced. And the next time that there is an audit where determining that the asset is missed, this typically doesn't happen for an extended period of time, usually a year or 2 years. So what happens is that ghost assets, as they're called, assets that exist that don't exist anymore but are still on the financial system, cause a whole lot of downstream problems, particularly in asset-heavy industries.
And in addition to ghost assets, there's another peculiarly named kind of asset. Tell me about that.
Well, the flip side of the ghost asset is the zombie asset. And a zombie asset, I don't know who came up with these terms, but a zombie asset is one that exists but isn't on the ERP. So when someone purchases a piece of equipment and they don't update the financial system, then the ERP is also not capturing the true picture of what a company owns.
Sometimes I think, when I've had the occasion of going out to a customer site or we're doing a use case story or so on, I'm sometimes struck by, the sort of stuff that I kind of see around. And I always wonder, is that on a set of books somewhere? So You're saying that curiosity is not misplaced, that there can actually be significant wealth, in a sense, capital products, capital goods that are just not properly accounted for.
That's correct. I mean, for a asset-heavy business like a manufacturing company or a telco company, it's typical that the fixed assets typically represent the largest segment of their balance sheet, ahead of even cash. So if you think about it, if a CFO is asked, what is the current value of the assets in real terms, they aren't going to know for another year until there's a field audit. If they're asked that same question about cash, and their response to the CEO is, "Well, I'll let you know next year when we take a look at our bank balance," that would not be an acceptable response. But yet for the asset category, that's typically the response is we'll let you know what the value of our assets is accurately the next time we do an audit.
Now, the stuff you're describing, I guess this happens in many industries, but in the telecom related industry, this must happen a lot. People, I imagine, come in and they just move a box, they move a server, they move an antenna or something, or it gets put in a closet and no one knows where it is or something like that.
Yeah. So there are two components that we actually capture. One that you're describing is the location. So we have partners that are also, I know a lot of people will be the audience of this podcast are familiar with IoT. We have IoT partners that use RFID and GPS technology to determine the location of the asset, which is an important part of understanding the whole asset picture is the location. So RFID and GPS technology helps us to know the real-time location of the asset. To your point of where things are, so that there's tagging technology that does that. The second component is the condition of the asset. So we use a mobile app to capture the current condition of the asset. And what's unique about our solution is it's actually the field operator that captures the inspection and the condition of the asset. Let's say the forklift, to use that example, on a regular basis, in addition to whatever is the normal every 6-month maintenance window that the maintenance people do. So the two building blocks of calculating useful life and accurate depreciation schedule and other things that matter to the finance team are location and condition. And we're capturing both of those in whatever frequency is required, every minute, every hour, every day, every week. But certainly a lot more often than is done typically with an audit once a year.
And Tim, before we move on, I understand you mentioned IoT in passing there. You actually won an award in this category.
Yes, so we're actually exploring how to get some patents around this, but the combination, as I mentioned, of the IoT derived location information and the human-based inspection capture together is something that's unique to us and pretty powerful. So the award we won was for the combination of using IoT and human capture of the condition using a mobile app. So mobile app and IoT, the RFID and GPS technology.
So far we've been discussing the enterprise, but could you sort of broaden my understanding of the types of industries or types of companies you serve?
Well, we started off actually in banking, so which has nothing to do with manufacturing, but banks, have a need to determine the value of assets for either used as collateral or the value of assets for loans in general. So we've done quite a lot of well over 1,000 asset and property inspections for banks. And that's how we got started. And then we've extended it to be a broader, asset-based capture with the IoT, the RFID, and the GPS technology, in addition to the inspections that we do. So in terms of industries that we are currently targeting beyond banking are manufacturing, logistics, healthcare, telco, any type of business that has a significant number of assets. The general size of the companies we're going after is revenue between $50 and $500 million.
Now, are there literally financial benefits to knowing what's happening? I mean, does it, we were talking before we started, at least we can kind of figure out a better idea of what the company might be worth. But, I'm thinking about operational things like line of credit and being able to borrow money against assets, all that kind of thing. Are there other benefits that come into clarity here?
Well, I think what you mentioned, as well as any type of M&A activity, requires an accurate picture of what the assets are currently and proof that they exist, and it's called proof of existence, actually, and the condition of the assets are what are as I mentioned, the building blocks to determining evaluation and the depreciation schedule. So a company needs to have their house in order if they want to be acquired, or a company that's acquiring another company will insist that that is in place. And typically that's done by an emergency audit. But with our system, it's their books are always in order. So there isn't any kind of friction if there's M&A activity, or if their assets are being used for collateral for a loan. It's a similar type of situation. That's when we're very familiar with. That's how we got started. You were mentioning financial benefits. The typical benefit is, we really look at the financial benefit based on payback period. Is the main metric that we work on with our customers to determine before they move forward with us. And in general, we are below 6-month payback period. Sometimes significantly less than 6 months, which is pretty good. And we, for $100 million in fixed assets company, we expect to generate about $1.5 million to $4 million a year in cost savings for them per year.
I was going to say, for a distributed enterprise, have you had the occasion where, maybe, for example, someone was going to go out and buy 5 of some very expensive asset, and because of this system, they discovered, hey, we have it in Kansas City, but
Yes.
we needed to move it to Lubbock, Texas, or something.
Yes, that's one of the areas that the savings in capital. Part of it is not knowing where all the assets are at any given time, so that there's not unnecessary capital expenditure on things that already exist. Partly, it's also that there's a savings to knowing that a company already has excess laptops. There's no need to go out and buy 10 more. And similarly, through doing regular inspections, there is supplemental maintenance information that can be fed into a maintenance system outside of the normal 6-month or 1-year maintenance window that will allow them to do preventive maintenance that will extend the life of the asset, which also has a financial benefit as well.
Tim, as we wrap up our podcast today, is this an opportunity for the MSP and also channel partner community?
I think there's a tremendous opportunity because the MSPs already have their foot in the door. They're already placing assets with the company, and we can extend the financial opportunity for them for providing technology to keep track of those assets over time after they've been deployed in one of their customers. So there's extra revenue for that, I think, beyond the initial the initial sale from partner.
Well, I really want to thank you for joining me today. This has been very interesting. We don't do enough on asset management. It's I think it's something we need to really look at. I hope the MSPs and channel partners also look into this. Where can people learn more?
Well, first, if there's a company that has within 50 to $100 million in assets that has not actually done an audit in over 3 months, then I would welcome any MSP to contact me, and we could work together with that company, because they're definitely losing money, and there's an opportunity for us to work together and for us to do make it financially beneficial to the MSP or whoever the company is, to find a way to help out that customer.
Well, Tim, I really want to thank you again for joining me today. This is really interesting. I hope we get to do a follow-up and maybe look at some of these use cases. But for now, thank you very much indeed.
Thank you, Doug. Really appreciate it. Thanks.
Innovate without limits, scale without compromise, and never pay per seat again. Discover why providers choose NetSapiens.com.